Hi everyone, this is a technical analysis on the S&P 500. Let's start with some fundamental background first. The S&P 500 surged to new highs following the miss in the US CPI report. Looks like the market is still trading based on the inflation and interest rates expectations and ignoring the softening in the labor market and growth data. Yesterday, the US retail sales were more tepid compared to the prior months, but they still came out better than expected, and the US PPI data missed forecasts by a big margin across the board. The bears are having a hard time to fight this positive sentiment, and perhaps it will take a clear uptrend in the unemployment rate to switch the market's focus. Now, on the daily chart, we can see that the S&P 500 broke above this key trend line following the miss in the US CPI report and is now near a swing point resistance. This rally looks overstretched though, as depicted by the price distance from the blue 8 moving average here. In such instances, we can generally see a pullback into the moving average or some consolidation before the next move. On the 4-hour chart, we can see that in case of a pullback, the buyers might want to lean on this upward trend line, where they will also find the blue 8 moving average for confluence. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets and position for a drop into the 4400 support. On the 1-hour chart, we can see that the price is diverging with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, the buyers will also find the 38.2% Fibonacci retracement level around the trend line for further confluence. If the price breaks below the trend line, the bullish setup would be invalidated, and the reversal into the 4400 support here would be confirmed. Today, the market's focus will be on the latest US jobless claims figures, given the recent softening in the labor market data.